Welcome to The Green Rush, a podcast about the business of cannabis. On a weekly basis, hosts Ann Donahoe and Louis Goldberg talk with the CEOs, politicians, and cultural icons driving the cannabis industry forward. This week is part 2 of Ann and Louis's adventures at November's Marijuana Business Daily Conference in Las Vegas. Sitting in Podcasters Row, squarely outside the largest cannabis conference in America, amid the hubbub of nearly 30,000 people, Ann and Louis spoke with 2 reporters on the front lines covering the legal cannabis industry. Bill Peters from Investors Business Daily and David Kretzmann from the Motley Fool. Both offered incredible insight into the business of marijuana and shared their thoughts about what we can expect to see in 2019. If you're not reading their work, you should be. As always, we'll have all the links in the show notes on how to follow them. Don't sit back, lean forward. Now on to our interview with Bill Peters and David Kretzmann with a little bonus content to follow. I won't spoil the surprise.
So we're here from the floor of MJ BizCon, and we are here with David Kretzmann, who is from the Motley Fool, which is it's a hybrid of an investor website. You do original content, and you've got an incredible platform for mostly retail investors, right?
That's correct.
Okay, so tell us a little bit about what you're doing and how you got to pick the cannabis beat, because that's a pretty cool.
Yeah, certainly not what I would have expected to be doing a year or two ago, but here we are, 2018, anything goes.
Yep.
So I've been at the Motley Fool for several years. I joined Fool HQ, based in Alexandria, Virginia in 2014. So for the first few years, I was focused on the U.S. side of our business, and the main business Motley Fool offers today are premium investing recommendation services. So typically you'll sign up, you get a couple stock recommendations a month, really helping retail investors build out a diversified.
What's the track record on those recommendations?
The track our bogey is always to beat the S&P 500, to outperform a basic index fund that people could invest in as an alternative. So our whole theory is that if we're going to be picking individual stocks, we should be outperforming the S&P 500. I
would hope so.
Yeah, that's certainly the goal. And our track record is strong in that regard with Stock Advisor, which is our flagship investing recommendation service. I don't have the numbers off the top of my head, but since that service launched in 2002, soundly outperforming the S&P 500. So anyway, I was with the U.S. side of our business for several years, and I'm still based in Virginia, but earlier this year, I joined our Canadian team, and our Canadian team is very decentralized. We have a few people working remotely in Vancouver, Ontario, and some people, like myself, based at Fool HQ. But this year, our general manager approached me and he said, we're getting so many questions from our members about cannabis. And initially, I was a little bit hesitant or skeptical because at the Motley Fool, our investing approach is to focus on the underlying businesses and apply a long-term framework to the stocks that we invest in.
That's a challenge in cannabis, isn't it?
Exactly. So I was hesitant. I was like, can we really apply a business-focused long-term approach to cannabis? Because
when the business changes every 3 months
right.
or a month
and it
or
also
day.
doesn't have years of earnings,
right.
and
there's not much of a track record.
Yeah, and there's huge regulatory overhang, and the footprint of these companies change dramatically quarter to quarter. It's hard to model, isn't it?
Yeah, absolutely. And before this year, I'd really just followed cannabis from a distance, and it's like, okay, it seems like there's a lot of penny stocks, there's a lot of speculation and day trading, just not the game that we play at the Motley Fool. Anytime we recommend a stock at the Motley Fool, we typically intend to hold it for a minimum of 3 years. So at first I was hesitant, but I was like, no, I'll look into this because I've been peppered with questions from members myself, and we just knew we knew that people were going to be buying these stocks with or without us. So it's like, okay, can we apply a capital F foolish approach to cannabis like we apply to other companies and industries? And I actually went up to Toronto to the O'Cannabis conference in June, had a chance to meet firsthand with some executives and insiders.
By the way, worst name of a conference ever.
I mean, I think it's hard to top that name, personally.
I think it's cute.
You're not a fan of O'Cannabis? No points for creativity?
0.
Okay.
Zero.
Well, agree to disagree on that.
That's fine. That's fine.
Okay.
Trust me, I'm not funny, so it's fine.
Neither am I. So, but after having the opportunity to meet firsthand with people who really have their boots on the ground in this industry, it's like, okay, we have October 17th approaching in Canada, and at this point, obviously, and we're still sort of in the stage of the cannabis industry where every company at this point is talking the talk. They're saying how great their brands are going to be, how differentiated their business model is. They're going to have the best distribution, the lowest costs, the highest prices. Everything's going to be great. But pretty soon, with October 17th coming and going in Canada, with more states in the U.S. legalizing, came to realize that we're going to soon see which of these companies are walking the walk, and we'll be able to apply that long-term business-focused approach that we love so much at The Fool to cannabis. So in June, we launched Marijuana Mavericks up in Canada, which is the Motley Fool's first ever cannabis investing recommendation service, really being upfront with our members that these are among the riskiest, most volatile stocks that we've ever recommended, and almost taking more of a...
Who were the first couple stocks that you guys looked at?
So a few of the companies that were included in our buy recommendations would be Namaste Technologies, CanTrust, Hexo, Kushco Holdings. Initially, we started with 10 companies. And the idea is that we're trying to find companies that are doing something a little bit differently, something to separate themselves from the rest of the herd, to build a differentiated business model with some sort of long-term sustainable advantage. And applying a venture capital style approach, recognizing that there's not a whole lot of quantitative numbers that we can look at right now. You can look at the balance sheet, you can look at some revenue in some cases. Most of these companies are still operating at a loss. So you're limited with how much you can apply these quantitative metrics to the companies. So taking a venture capital style approach where we're looking at the qualitative factors like leadership, business model, strategy, and focusing a lot on the qualitative side of things, and also with that venture capital style approach, recognizing that a majority of the returns going forward are likely to come from a select few of those companies. So of those 10 companies we initially recommended, I wouldn't be surprised if 5 or more of those companies just don't pan out the way that we anticipate or hope that they could.
Don't pan out as in like pets.com and go away, or just that they get a,
Yeah, they're duds. They underperform. Potentially they go bust. They just fail to gain traction in the way that we think or hope that they could in the coming years. But our whole hypothesis here is that there's no doubt that there is a large, legitimate, global, legal cannabis industry forming here, and that there will be eventual big winners in the bunch. So within Marijuana Mavericks, we're trying to find companies that look somewhat likely to be building some sort of differentiated model
in Canada.
In Canada, in the US.
No, but the Mavericks is...
So Marijuana Mavericks launched in Canada in June, but then in October we launched essentially the identical service. Legally we had to change the name, so it's Marijuana Masters here in the US.
Right, okay.
We launched that in October.
We'll have links to all of this in the show notes.
Yeah, and most of these services, when we do launch these services, they're only open to new members for a brief window of time, but Marijuana Masters is actually open for new members right now. So if you go to join.fool.com, you can learn more about that service. It's currently open for a few days.
And how much does it cost to become a member, approximately?
It's in the thousands, several thousands. So we're upfront with members saying that cannabis stocks should be a relatively small portion of your overall portfolio. I've personally invested in every company that we've recommended within the service. I start with about 5% of my overall portfolio, because if you think small caps or micro caps are volatile, cannabis stocks will take that volatility to a whole other level. So you just have to be comfortable with 20 or 30% swings on a daily or weekly or monthly basis. That's more the norm, not the exception in cannabis, as you all well know.
So you buy cannabis stocks and you buy Tums and you just chill.
That's it.
No,
chill
and
for 3 years.
And you smoke.
Or you smoke, yes. You buy the stocks and you buy the product and you're good to go.
Whatever floats your boat.
Yeah. So, and who are your members? Like, if you could do and are they different in Canada and in the U.S., like in terms of like their profile?
I'm sure there's some difference, but for the most part, we're serving everyday retail investors. So that really the mission of the Motley Fool for a long time has been to help the world invest better. So trying to just make investing in stocks in general, more approachable and relatable to everyday people, saying, you can do this on your own. We can pick individual stocks and beat the S&P 500 or outperform the mutual funds that so many people get stuck with in their retirement plans, or they just default to the mutual funds out there with the high expense ratios and things like that. So we're trying to make the whole concept of the stock market and investing in individual companies just more approachable and relatable. And we're applying that same approach to cannabis here. So it's been a fascinating industry to follow. The great thing about the cannabis industry is everyone is so down to earth and approachable. All these companies are looking for exposure, looking to get their stories heard, because at this point, most companies really only have stories at this point. So it's been great to be able to interview a lot of executives and insiders and share that content with our members and just try to get more comfortable with the space. And then again, applying that long-term approach here. So I've personally, as I mentioned, I've personally invested in every company that we've recommended within those cannabis services, and I've committed to not sell a single share of any of those buy recommendations for a minimum of 3 years. So we're really trying to fight against the short-termism, the speculation, the day trading that just dominates the investing landscape with cannabis today, recognizing that, yeah, not all these companies are going to succeed, but if we can find one of those bigger eventual winners, those winners are going to materialize over the long term.
So we describe it as that some of these companies are going to be Amazon or Apple or Google. Some of them are going to be, like I said, pets.com, and having a broad enough exposure will give you the opportunity to have that huge upside and finding those huge winners. Mm-hmm. Is there a fundamental difference between the basket of companies that you're looking at in the Canadian version versus the American version, or are they the same group of companies?
It's the same group of companies. Sometimes a company will be so small, often traded in Canada, that we just can't recommend that to our U.S. members because we have more members in the U.S. and we would just pop the heck out of that stock if we recommended it in the U.S. But it's the same basket of companies. It'll be companies that are both Canadian and U.S., but obviously, just given the regulatory landscape, if you're a U.S. operator, you're going public on the Canadian Securities Exchange. So there's really no way you can separate the two. You can't focus entirely on the U.S. or Canada without looking at the other. So I'd say for the most part, you could say that we're focused on North America, but yeah, focus on companies that are listed in Canada and the U.S.
So over the last couple of weeks, we've seen some huge U.S. big U.S. companies list, right? You saw Curaleaf raise $400 million. You saw Acreage raise over $300. I'm not sure what Harvest came in at, but there have been this series of American companies that are raising a massive amount of money. And then you compare that to what happened in Canada, where you have Aurora and T-God and Canopy that have even bigger war chests. Mm-hmm. And there's this trend of M&A. Do you think the U.S. guys have enough of both a physical lead and a cash lead to hold off the LPs in Canada, or where do you see this going?
I mean, for now, the Canadian LPs really have their hands tied when it comes to expanding within the U.S. And I think more attention from the media and the investing community will be shifted toward the U.S. in the coming months and years, especially depending what happens with the U.S. federal government. If it's decriminalized in 2019 or 2020, like if you think October 17th was a big catalyst for the industry, just wait until that happens here in the U.S. But
any predictions?
I think we'll see a major step in 2019. I wouldn't be surprised if States Act or some. I mean, you just never know what Trump is going to do. But Trump has never actually spoken out against the idea of legalizing cannabis. And I think now after the midterms, you just have a lot of momentum within Congress, with the executive branch, and then with the states in general. That I would be surprised if we don't see some major step toward.
You referenced October 17th, mm-hmm. and the impact that has had on the capital markets is exactly the opposite that you would assume, right? You know, after Canada formally legalized, we've seen a 40 or 50% drop in the industry. Mm-hmm. When does that reverse, or are we in?
Or was that a correction?
Or and also this happened similarly last year at this time, that there was a big sell-off until January, and then the stock started to appreciate.
I mean, it's impossible to say, and I'm not in the business of predicting short-term share prices, but I think it's fair to say that a lot of the larger Canadian producers, it's hard for me to justify the valuations that they were at. And even in the case today, I think it's still hard to justify the valuations that they're at. Because you think about it.
You mean $33 billion for Tilray is just
I mean, it
with
might
zero
be
revenues?
A tad high. But when you think about it, those Canadian LPs have their hands tied when it comes to entering the U.S. market, so long as you have that murky legal status on the federal level. California's cannabis market today is bigger than Canada's probably ever will be. And that's just California. And you think about the multitude of other states in the U.S. that are legalizing either medical cannabis or recreational cannabis in some shape or form. I think the majority of the value should be shifting to the U.S. because the U.S., for a variety of reasons, is just a far more attractive market than Canada. You think about the branding and packaging restrictions that you have in Canada. You can only have a small logo on what's otherwise nondescript, plain medical
and you already
packaging.
can't advertise, so like how
Yeah.
are people really understand? Yeah, I mean, we talked with Nick Kovacevic about that the other
Right.
day, and it's insane.
The CEO of Kushco.
CEO of Kushco, and
Yeah.
I mean, and people have to be really creative about what's on the shelf, and they have to prove that every little thing is meaningful to the like it does something in the package, which is just anyway. Sidebar.
No, I think it's a great point, because you think, okay, are you more likely to create an eventual dominant global consumer brand with that really restricted environment in Canada, or in an environment like California or Colorado, where you're not limited by product forms? You can do more than just the dried flower and the oils. You can do the edibles, the beverages, the vaporizers. You can already do that in markets like California and Colorado. And then you're also not restricted nearly as much when it comes to building a brand, having creative packaging, different things like that. Plus, those markets are bigger than Canada's market probably ever will be. So I take a step back and I think, okay, there's probably going to be more value to be captured in states like California and Colorado, and as more states come online in the U.S., than will ever be created in Canada. So I think there's going to be a flip that switches at some point. I think as more companies operate in the legal adult use environment in Canada, we'll begin to see, okay, this market isn't quite as big as might have been hyped up to be, or certainly not big enough to justify those lofty valuations of the bigger producers. And I think you'll see attention shift to the U.S.
The Motley Fool is, for the retail investor, is well known. Can you talk a little bit about the way that you analyze companies? Like, what is the lens that you look through to say, okay, buy, sell, hold, and duration? And then I'm gonna also ask you, give us 2 or 3 names that you like, because why not? You're sitting here, and I would be stupid if I didn't ask. So talk first about the lens. Like, how do you evaluate these companies?
Sure. Well, I'd say the Fool focuses on qualitative factors more so than a lot of other investing recommendation firms out there. We're focused on things like a company's leadership, employee culture. Is this a place we'd want to work at? Is this a CEO we'd want to work for? Trying to look at it through that lens. And then from a higher level perspective, we're trying to find companies that will be increasingly relevant 5+ years from now. Ideally, we're finding companies that we won't just be holding for a few years, but ideally, in the case of like Starbucks or Amazon, companies that we want to hold for decades, companies that will be creating value and becoming more relevant in our society around the world. And that's where the majority of the value is created, with companies like Apple, Starbucks, Netflix, Amazon. The great returns aren't captured in just a couple years with any of those great companies. They're captured when you can find those great businesses and just diligently hold them through thick and thin over a long-term time horizon. So from a higher level perspective, that's really what we're looking for, is finding companies that will be increasingly relevant. So that means you're typically going to find companies that are growing their revenue at a pretty healthy rate. They're operating in a market, a total addressable market that's ideally growing and expanding over time. And then companies that have a strong balance sheet and or cash production to fuel that growth and fuel that investment.
All right, so name some names
of cannabis in particular.
Yeah, the guys that you like, and maybe you're going to give our audience, this is a special discount for you listening, but access to some of the stuff that you guys are. I mean, I know you named some of the names in the 10, but maybe not who are in those basket, but that are maybe just on the outside that you're looking at and saying, I like those guys. If only, and then,
Sure. Yeah, I'd say Medman is a company that at first I was skeptical about when they first IPO'd earlier this year, but spending more time looking at the U.S. operators, and I really like a lot of the approaches they're taking to building what seems to be a pretty powerful brand in key markets like Southern California, Las Vegas, New York City. With that said, they're not shy about issuing stock and diluting themselves to make a lot of acquisitions. They're burning a lot of cash. So I just wonder, okay, how durable is that approach? I want to actually see some tangible traction from them with the actual underlying performance of the business. So if I actually saw operating cash flow production start at least getting close to being break even, or if the company was able to sustain itself without relying on debt or equity, then I'd be a lot more comfortable stepping in. But that's a company that's toward the top of my list because, like I mentioned earlier, I think the majority of the value going forward will be coming out of the U.S., especially if and when the federal government does decriminalize cannabis. I think you just see the floodgates open within the U.S. for all the reasons that we've talked about. So MedMen is another one that's on our watch list. Similar reason, Charlotte's Web, a company that's focused on the hemp oil and CBD side of the business, but they're a company that's impressively already profitable today. They're not burning a lot of cash. They're not unprofitable like a lot of the other cannabis producers in the rest of the U.S. or Canada. In that case, I just wonder how durable is the brand advantage with CBD? Like I personally bought CBD from Charlotte's Web, but there's nothing really There's nothing developing a sticky relationship there, at least in my experience. And they're a company that's trading over $1.5 billion today. So I just wonder, okay, are they able to enter new categories and apply the early brand power that they have to other categories to justify what's still a pretty lofty market cap? So those are a couple of the companies today. I'd say most of my attention is shifted to companies that are demonstrating traction here in the U.S. and doing something a little bit differently, especially on the consumer brand or the retail side of things, because in most industries, the majority of the value will be captured with the companies that are interacting with the consumers on the ground floor. So that's why I think MedMen, Charlotte's Web are interesting companies to keep an eye on.
What's your, we talk about this on the podcast, at the end of every episode, which I'm not saying this is the end, but what's the big story that we're missing? Or what's the one story that you think isn't getting enough attention in the cannabis industry?
I'm going to sound like a broken clock here, but I think the U.S. is something that has largely been overlooked. So much of the attention has been focused on Canada, especially with October 17th, and it's a huge milestone. I don't want to downplay that at all. So Canada, rightfully so, attracted a lot of the attention. But when you just think about the U.S. being a far bigger market, a market that's friendlier to cultivating brands, you have multiple product forms already legalized today, not some iffy date in the future. I just think the ability for companies to potentially build a powerful, dominant global consumer brand is far higher if you're operating in those environments in the U.S. than if you're just focused in Canada or Europe or Australia, markets which are interesting and certainly worth exploring, but just from that brand development perspective, I think are far more limiting. So for that reason, I think the U.S. is something that has largely been overlooked, and I think going forward, I wouldn't be surprised if you see the largest market cap companies in the industry shift from being those Canadian producers to these U.S. companies.
So Boris Jordan, the executive chairman of Curaleaf, has described the U.S. as the largest emerging market in the world. Right? It's already a $75 billion annual market and only about 10 or 11 billion is illicit. So you're talking, even without expanding it from a form factor perspective, a $65 billion market opportunity. And these companies, the U.S. companies, they're not targeting 30% market share. They're targeting 5 or 10% market share. So the opportunity that they see is tremendous. As you've covered the capital markets, do you think that investors are going to take a cyclical approach to the industry where, okay, Canada was the flavor of the month. Now that Canada is legal, you buy the rumor, you sell the news. It's time to come into the U.S. Will we see a rotation out of the Canadian stocks into U.S. stocks as we get closer to a potential passage of the States Act?
I wouldn't be surprised if we see something like that. Again, like I'm always looking at this not from where. Not with the angle of where will these stocks be in a year from now. I'm more interested in where will these companies and their respective share prices be 3+ years from now. But yeah, personally, I wouldn't be surprised if we see more investor attention and investor dollars shift from those Canadian companies to the U.S. for all the reasons that we've talked about. And I had a chance to speak with Ben Kovler, the co-founder and CEO of Green Thumb Industries.
We're big fans of Ben's.
Yeah, a really impressive company. And that's another one that's on our watch list, by the way, along with MedMen and Charlotte's Web and a few others. But the way he put it is that in Canada, you have a total market cap of the Canadian producers that's somewhere around $65-70 billion, depending on the day or the hour.
Not today. Definitely not
today. Yeah, a little bit of carnage out there. But you have essentially, let's say, $70 billion of market cap going after what's a market opportunity in Canada anywhere between $5 or $10 billion.
No, they're estimating it. So Adam Orange from the Marijuana Policy Group, which does these types of big policy analysis, said that the Canadian market Cowen has pegged it at around a $5 to $7 billion market, right?
Okay, yep.
Adam is saying they're off by a good 30 to 40%. It's at least 30% bigger. So, but
Okay,
even if it's a $7 billion market and you do 30% bigger, it's a $9 billion market.
Yeah,
right?
so let's be generous and say it's a $10 billion market opportunity in Canada. But today you already have about $70 billion in collective market cap of the Canadian companies up there. Flip that to the U.S. and you probably have anywhere between $10 and $15 billion in market cap among those bigger players for a far bigger market opportunity. So it's almost like the inverse, where Canada you have a lot of market cap for a smaller market opportunity, whereas in the U.S. you have a smaller market cap for a much bigger opportunity. So I think investors and the media will increasingly see that divide and recognize, hey, there's probably a lot more value potential for investors and for entrepreneurs in general here in the US. But again, our approach within Marijuana Mavericks or Marijuana Masters is always looking at that long-term lens. And honestly, like speaking with the entrepreneurs and executives at these companies, I think they're entirely on board with the investing approach that we're applying here, focused on following the progress of the companies over the next 3+ years.
I mean, we do IR. We would love, for all of the shareholders to be like, we're in it for 3 years. And,
right.
like we would get fewer nasty calls.
I mean, the problem is that it's so widely held by retail. And these retail investors, they own a couple hundred shares, a couple of shares,
Yep.
and every move, they're on the phone calling management or calling us and saying, why is the stock down 2% today?
Mm-hmm.
They don't have this long-term view. So you educating the industry as to 3 to 5 year time horizon is much healthier, I think, both for the investor and for the industry. Wish some of the CEOs weren't sitting on level 2 all day, but they do.
I mean, a lot of the entrepreneurs and executives that we talk to, I mean, that's similar to how I think great entrepreneurs in any industry will look at their companies. They're not so worried about their next quarter's results. Unfortunately, a lot of companies can get caught up in that short-termism and just fret about how Wall Street's going to react to the latest quarter of earnings. But you think about the visionary leaders like Jeff Bezos with Amazon or Reed Hastings with Netflix, they're far more interested in where their companies will be 3 or 5 or 10 years from now than the next couple quarters. Jeff Bezos said, when people say, congrats guys, great quarter, he's like, that quarter's results were locked in 3 years ago, and we're focused on that quarter 3 years from now.
Is there a CEO that's operating today that you're going, that's the Jeff Bezos, or that's or I mean, is there, who's the guy that you're going, or woman, hopefully, that has that kind of vision?
I don't know if I put that much pressure on anyone to say that they're the Jeff Bezos of the industry, but to your point, something that we'll look at is insider ownership. How much skin in the game do these executives have? Because in a lot of cases, a lot of these companies have only been publicly traded at most for a few years. So it causes me to scratch my head if you see a young company that's still losing money and you have a founder CEO who only owns 2% of the company. It's like, okay, if you don't have enough conviction to have a high percentage of your net worth in your baby, in this company you're developing, why should we as investors trust you or put our hard-earned dollars there? So
that's what Danny Moses says, the same thing. Mm-hmm. He's a big high net worth investor in the space, and when he analyzes companies, he looks at what percentage of ownership and how frequent does management actually sell. If they're selling into, they may be paying themselves $1, but if they're consistently selling shares into the market, it means that they don't value the equity as much as they value cash.
Right. No, and I think that's an important thing to look at, because right now is the time, if you're going to try to get a short-term cash grab, I think there are people who are unfortunately jumping on that shorter-term opportunity. They're not really building a business for the long term. They're more just trying to ride the wave of investor and media hype right now, and then slowly but surely cash out along the way. But one company that I do really like, the approach, is one that we've talked about, Kushco Holdings. Nick Kovacevic, the co-founder and CEO,
and client of KCSA's, full disclosure.
Yeah, and no one put me up to say that. Full disclosure.
Here, wait, give me that 50 back.
Right, slip it to you. No, but something I like about Kushco is that the co-founders still own, I think, over 30%. Insider ownership as a whole is close to 50%. To me, that just gives me so much more confidence that, okay, these co-founders and the people who are running the business on a day-to-day level, they're much more interested in where the company will be over the long term, and they're not just juicing it up for short-term results and short-term gains. So that's something I really like to see. And some of these other U.S. operators will have higher insider ownership. You have like really, unfortunately, complicated holding structures where it'll be, a private investment vehicle that owns 60% of the shares, and it takes a little bit more digging for the investor to figure out, okay, who owns that private investment vehicle, who owns the majority of this company's shares. But yeah, Kushco is one where I like to see, first of all, the co-founders still with the companies, and then co-founders still owning a very healthy chunk of their overall business. So for me as an investor, I wouldn't invest in a company only because of that, but it's certainly a factor that we look at.
I have a dumb question. I think it's a dumb question. Do the exchanges matter? So we interviewed Richard Carlton.
Oh my God,
It's totally fine. I mean,
it's not a dumb question. It's a good
Richard
question.
Carlton the other day from the Canadian Securities Exchange or the Cannabis Stock Exchange, depending on how you name them.
Mm-hmm.
And the fact that a lot of these U.S. companies, their only vehicle is either in Canada. I mean, and the TSX has said, thank you no more, right? So it's only the CSE, or they can go to the OTC in the U.S., and they're very limited in getting on the big exchanges. Does it matter? Do you look at that, and does that matter? Like, Kush is a great company. It trades on the OTC. Would you look at it differently if it jumped to the NASDAQ?
I certainly think if you're on a higher level exchange or a bigger exchange like the NASDAQ, NYSE, or the TSX in Canada, it certainly helps just from a reputation perspective. But in this case, looking at these cannabis companies, I'd say I've gotten more comfortable looking at the smaller exchanges like the CSE or the OTC.
I had never heard of the CSE before cannabis.
How
about the NEO? I've never heard of the NEO until recently.
Yeah, the NEO is a newer one. I haven't actually looked at many companies very, very closely that are traded on the NEO. So I think you do want to be careful as an investor looking at companies on those exchanges, because you certainly have some winners there, but sometimes companies will be on those exchanges for a reason. They're not able to list on those bigger exchanges. I think cannabis companies have a legitimate excuse. Like they just really have their hands tied. They don't have a whole lot of options. So specifically looking at the cannabis space, I'm comfortable with a company regardless of which exchange it's on. And then from there, just looking, for those underlying factors like business performance, leadership, insider ownership, strength of the balance sheet, what's their long-term strategy. And if if we can check the boxes on those areas, we're kind of indifferent to which exchange the stock trades on.
I think that's a lot.
We covered a lot of ground.
We
but this
did
was
cover
a lot of fun.
Yeah.
So plug it again. So we're talking to David Kretzmann of the Motley Fool. Where can people find you?
Yeah. So if you're interested in learning more about Marijuana Masters, which is the first ever cannabis investing recommendation from the Motley Fool in the U.S. It's open for a limited time, the next couple of days in the U.S. You can go to join.fool.com. Then more broadly, you can find more information in the U.S. at fool.com and fool.ca if you're based in Canada. We also have operations around the globe. So for any international listeners, feel free to jump into those sites. And we also have operations in Australia, Germany, the UK, increasingly Fool Asia. So Motley Fool is global,
awesome.
trying to cover a lot of industries, including increasingly cannabis, which has been a lot of fun. So check out fool.com.
Awesome.
Thank you so much.
Thanks for having me. This was great.
We are, again, from the MJ Biz Con show floor from Podcasters Row, and we have the pleasure of speaking with Bill Peters, who is the cannabis beat reporter and editor for, well, what's your title? Sorry, I'm going to have him do his own title because I screwed that up. Hey, Bill.
Hey, I'm just a reporter. I'm not
From
an editor.
Investors Business Daily,
Yes.
Investors.com, prestigious publication
Yes.
that is now covering cannabis. So that's a big deal.
Yeah, although actually, my editors were really pretty cool with it. I think we held one meeting about new topics to cover. This is sometime last year, and somebody pitched the idea of covering medical marijuana.
Where's IBD based?
Los Angeles.
So it was a really hard. I mean, did you guys bring in product to sample around the table?
Oh yeah, I'm selling to everyone in the newsroom. Yeah. It was and actually it was pretty much after that one meeting. It was not a long meeting. I just decided to register with one of our producers to go to a conference that was taking place in downtown LA at around that time. This was around September.
The Cannabis World Congress.
What's that?
It's probably the Cannabis World Congress.
It was MJAC 2017. That
I've never even heard of that.
It was it was in downtown LA last year, beginning of September, I think, and that was the first conference that I went to. And before that, I think I interviewed maybe somebody from, I believe it was ArcView, and that was, I think, the first story that I did about the industry. And basically, it was not a long conversation. We really just decided to start doing it.
And so, is it your full-time beat now?
No, I cover lots of other things. I cover banks, I cover airlines, I cover fast food, I cover some retail, but increasingly I've been trying to focus more on this, and I've been doing far more reporting on this industry than those others in recent months.
Are you finding you get more feedback either from readers or from like your colleagues on the stories that you do on cannabis? Are they still considered sexy?
How do they rate?
Yeah.
Well, what is interesting is that as I've started to write about this more, and as more people that I know just in my life come to know about it, a lot of people have come forward and say, well, hey man, listen, I actually take a CBD, and so I've gotten that conversation a lot more from a lot of people that I know who I would not expect to have that conversation with. Yeah.
What is the thing that, as you have started to cover the industry in more depth, and you bring the rigor that IBD does from a financial media publication, what's the thing that's been most surprising about this industry to you?
Most surprising? I think the thing that always surprises me is, and it's the thing that I think I'm most interested in covering this industry, is how the industry is sort of finding its way through cracks in legal barriers. I think earlier this year I heard about when Kronos Group started trading on the NASDAQ.
Yep.
That, of course, raises obvious questions, or at least it was obvious to me. Well, how are they able to do that? And so, in something like that, where you have an exchange that's said to be sort of industry agnostic, something like that was interesting to me, and it's surprising to me, and I think it's surprising to me because of when I grew up, when this product was very illegal, and the culture was very different around the industry. I think that seeing my early notions, my early perceptions of what cannabis was, run up against the dense corporate.
Did you have a Gestalt moment? I mean, was there this moment you went, "Oh wait, this is real. This is a real business. This isn't just a bunch of guys slinging weed"?
Well, yeah, I think it's. I think when I first checked back in with the industry, and I noticed the marketing of it. There's sort of this kind of Whole Foodsy startup aesthetic to some of these companies, and then when you go to these conferences, and and obviously there are tons of people in suits. I think that's that's when you realize that obviously a change has arrived. Yeah,
the money has arrived.
Yes, that too.
Yeah. And how do you report on it from a? Do you report on it from a U.S. investor perspective, or are you reporting on it from a more global or North American perspective?
Primarily from a U.S. investor perspective. I think we sort of started covering this. I think the entry point was kind of like it was Canopy Growth and Kronos debuting on the NASDAQ and the New York Stock Exchange. And so, and since that's what our publication focuses on, is mostly trading on the big U.S. exchanges, that's sort of where our focus is. I've kind of branched out and begun talking with, some of the U.S.-based companies that have gone public in Canada, and I've started to cover more of that cross-border insanity that's happening with the different deals and investments going on.
Is there an industry analog that you see to this? I mean, a lot of people have said this is akin to the tech boom in like late 90s, early 2000s. I know that others are saying, this feels a lot like the crypto boom, from a year and a half ago. I mean, is there a lens that you're looking through this industry at?
I try to read as much analyst research as possible, and get as many.
Not a lot of reading.
Yeah, well, actually, analyst coverage has grown, and and you get research reports that are that are written about with the writing. The prose is the same as as any other stock that you'd cover.
Is there an analyst that people should be paying attention to that you think is really doing a good job?
Let's see. I don't know if I could endorse anybody, but I think that obviously Cowan was an early.
Yeah, Vivian does a good job.
Yeah, and I've spoken with Vivian a couple times, and then I don't know if I can endorse anybody per se, but
so we're not going to put. Well, we won't even ask you to name stocks. I mean, we had David from Motley Fool on, and we said, all right, you have to name names, so we're not going to make you do that.
I can't pick stocks, but I do think that
I can pick them, but if I pick them, they go down.
Well, to actually answer your original question, I don't know how long some of this can last. It seems like, I feel like. Certainly in a new industry, there is going to be a kind of a .com-esque shakeout. I don't know how that doesn't happen. That doesn't mean that bigger survivors don't emerge the way Amazon or Netflix emerged from the .com era.
Right.
Those are the two companies that David Kretzmann just mentioned too.
Yeah. Well, because there is an analog, right?
Yeah.
I mean, I think that for the way that I look at it, and I think that we look at it differently, is the internet boom was based on a potential market that had not yet been realized. The cannabis industry is taking an already existing market and converting it from an unregulated, untaxed, illicit market to a regulated, taxed, licit market, right?
Sure.
So you're not creating demand. People already smoke pot or eat edibles. It's now just getting them to do it in a regulated fashion.
Yeah, and that's the argument that a lot of executives make, is that the demand the demand has been there for decades. It's just a matter of converting it. And that's where you start to run into problems. There's some research out there that says that I think, I forget the exact number, but a sizable chunk of people in California still occasionally bought on the illicit market, largely to avoid markups and taxes and inconsistent regulations from community to community. So it's as everyone in this industry said, it's not going to happen overnight, that transition.
Well, and so many of our clients say that their competition and the big multi-state operators, their competition is not necessarily one another, because there's enough for everybody at this point, but their competition is really the street and the black market.
Yeah.
And trying to convert those people who are so used to buying on the black market, but not really knowing what they're getting either. And especially from a medicinal purpose, that they're not really understanding, what's in it from the guy that's been delivering it to me for years,
Sure.
Not really understanding.
Yeah, that's certainly, that and that's competition being the street. It seems like a lot of the companies that operate in different states, it seems like it could be a few years before they actually start running up against one another. Yeah.
So readers who look to you are looking for insight into what's going on in the industry. And as you have been covering public companies for a long time, are there any warning signs that if I'm an institutional investor or a retail investor, that I should be looking out and saying, their story is way ahead of what the actual company is? Like, how do you, if you were to counsel people, like, what are the things to look for to not buy a company?
Yeah, I can go off of what has been reported, or at least, the investor alerts that have been issued by, say, the SEC, and I think there was another Canadian regulatory agency that several weeks ago, or shortly before legalization in Canada, said that basically Canada's marijuana companies aren't exactly doing a great job, or could be doing a better job in disclosing their financials and being clear about how they're measuring some of these things. Like cost of production, there's no standard way of measuring that, And the SEC put out an investor alert, I'm forgetting when at this point, that kind of advised people to use the same due diligence they'd use with other companies, like frequent name changes, or, guarantees of massive returns. Those should be, things like that, the SEC says, are what people should watch out for. That's pretty basic, but that's sort of what's going on right now with.
So we're getting the boot before we do. What is the one thing that people are not paying attention to, whether it be investors or the industry, that you think that everybody should be paying attention to?
What I'm paying attention to right now, and I'm sure that there are people There are plenty of people walking past us right now that know a lot more about this industry than I do. I'm a year and I'm still learning, but what I'm sort of paying attention to is how these companies can avoid just selling what ends up being regarded as a commodity. How do you get customers to commit to
building a brand?
And to a certain cannabis product the way they would commit to, say, Marlboro or Budweiser, a generation ago.
Mm-hmm. All right. Well, hey, thank you. This was a short conversation. We would like to have you back to have a much more in-depth conversation. Where can people find you? What if social handles or?
Yeah, I'm on Twitter. That's at IBD_B Peters, BPETERS. And that's usually where you can find me.
And his work is on investors.com,
Yep.
and he's
produced
an
website,
incredible amount of work. So good job. Go off.
Thank you.
Awesome.
Go forth and report. And we'll put all those links in the show notes. So
Okay.
Thanks, Bill.
All right,
thanks, Bill.
All right. So Ann and I are now joined by two of our friends who work with us at KCSA, associate producer, producer, Nick Opich, who has been on the pod and
Producer.
Whatever.
Finally got to make it to Podcast Row with you guys.
It's awesome.
Yeah.
And we're also joined by Annie Graf, who is on the KCSA team.
In
Welcome.
LA.
Hello. Happy to be here.
You don't sound like a horse.
Oh my God. That is so making the show.
Happy to be here.
Wilbur.
We have a lot of clients here, and you guys have been running all over, managing interviews with the media. And this is both your first time here at MJ Biz. What do you think the media is? Are they as overwhelmed as it feels like everybody else is? Or are they just kind of plugging along and this is another day at the office?
I think it's definitely not another day at the office, because as anybody that was at MJ Biz trying to do registration yesterday could see, it's going to take an hour and a half just to get in here, because so many people are so excited about this and showing up. And I think that startled the media, because some of these people were thinking, oh, I can just show up and just register on the floor, and then all of a sudden they're waiting in line for an hour and a half and getting all frustrated. But
didn't we do a couple of interviews from the line?
Yeah, we did a couple of interviews
just
right
brought
in
the
the line with
clients
some
to them.
clients. It's like, all right, they got their badges, we'll come in out here and just talk with them. But I think there's definitely a lot of excitement, but I don't think they were really prepared for how quickly this has jumped in the last year, and how quickly it's going to jump next year, because they're already talking about having to expand this into the North Hall at the convention center next year. So it's going to be even bigger.
CES level shit right there.
So Annie, you've been doing PR now for a long time, and you've been working in the cannabis industry for a couple of years. Have you seen the type of reporters change? Is it still the same kind of trade show stuff that
No, I think there's definitely a much wider kind of swath from across the media industry and types of publications that now cover this industry. So I think it's growing constantly. And it's not just freelancers anymore working for multiple publications. They're dedicated now beat reporters that are covering cannabis. So.
Who do you think's doing the best job covering the space right now?
Well, I think that question totally depends, again, on what, it's getting broken down now into sectors. You have someone like Craig Giammona, who really has his finger on the pulse of what's going on financially.
And he's at Bloomberg News.
Yes, and then you have reporters that are covering different aspects. So you might even have an excellent reporter that's writing for a smaller publication like Greenhouse Growers that is focused more on agriculture and sort of that whole sector within cannabis. So it's now becoming so broad that you can literally have reporters covering almost mini beats.
You guys have, I assume, been to other trade shows. How does this one compare to other ones that you've seen?
It's huge. I went to the Cannabis World Congress in New York, and I thought that was really big. I think that was my first major exposure in terms of a cannabis conference. And outside of, I think, one of the days when all the media was there, that was crazy hectic and doing everything. But the day after, it's all right, everybody's still going along with the flow. But today, even we're doing day 2 here on the Podcast Row, it's there's still a bunch of action going out there. There's tons of people walking the floor. So I think there's a lot of excitement here. People are really looking for this to get big.
Anything that you guys have seen here that popped your eyes?
I think it's the excitement from the local media, I think, is very surprising, because if go back a year and a half when we were trying to pitch this to, like the local network stations or the local dailies and stuff, they weren't that excited about it. They thought it was like a little bit niche, and then they would have to also combine it with like, okay, but it's also still dangerous aspect to it, where I'm walking around with like the local Fox 5 and CBS 8 out here in Las Vegas. They are just so excited about this. They are only talking about it in a positive way on how the community's embracing it. They're loving that Las Vegas is the hub for it. But we're also seeing that in like markets like Maryland or Pennsylvania, where it's a lot more limited. It's still medical out there, but we've gotten to the point where reporters are telling us, stop calling us about this stuff. Like, we've already covered like these dispensary openings. We're not worried about that anymore. We want the big news, the more important stuff.
Annie, you were talking before we started recording that you were surprised by what the demographic of the people walking through the conferences. And one of the big issues that the industry faces is that there are not a lot of women or people of color here. So give us a little feedback on what you're seeing as you walk through.
Yeah, I mean, I think that at a conference of this size, you're really getting I would argue that this is sort of an accurate representation, because people are coming from all over the country. This is a draw for the entire industry to be here this week. And, I do have to say, like, you are still seeing a very predominantly male, group of attendees of even the vendors and the different folks that are here with booths. So I would say that, there's still a bit more work to be done maybe to make this industry friendly and open to women, but there are women here, and I think people are kind of like aware of that different sort of bit of growth that we could really sort of we want to encourage from women. So I think maybe it's just going to be a process. So it's hopeful.
Cool. All right. Well, thanks, guys. Get back to work.
Thank you.